Hello, welcome back to the channel. My name is William Gomez, your local mortgage banker, and I'm here today to talk to you about, to honestly debunk some myths out there and stigmas that FHA loans have, right? A couple of them are that FHA loans are for first-time home buyers only, or that they're only for people with low credit scores, or that the credit scores are actually higher than the actual minimum scores. Did you know that you can actually get an FHA loan even if you have a score of as low as 500, as long as you have a minimum of a 10% down payment? If you haven't subscribed to the channel, make sure that you do. We love to post videos like this to educate home buyers and homeowners to be able to acquire wealth through real estate. So I cannot wait to dive in. Let's get into it. All right, so right into it. Let's talk about conventional versus FHA. So for starters, if you have a credit score that's going to be, let's call it under 680, a lot of the times your FHA loan is going to be, even if you're not a first-time home buyer, a lot more profitable and a better choice for you. And a couple of the reasons for that is because if you have a credit score under 680, to be completely honest, anything even under 700, your pricing on your interest rate and on your PMI is gonna get a little bit pricey on the conventional side of things. And what that means for you, it's going to mean that for the same purchase price, you have same home, conventional is gonna be more expensive than if we were to do an FHA loan on a monthly basis, because the interest rate is gonna be higher and the private mortgage insurance is going to be higher as well. Now, the other thing that I wanted to talk about was a lot of people have this stigma that FHA loans were the reason why the market crashed back in 07 and 08, whenever people couldn't make their payments and pretty much went into a recession due to the housing crisis. And that is just not true. The reason why we went into the housing crisis that we did is because there were other type of loans that were non-traditional loans. So your traditional loans are going to be like your FHA and your conventional. So these were subprime loans that didn't have to do with anything to do with government loans. And pretty much you could walk into a mortgage loan officer's office and say, hey, my credit score is 740, and if it was, and let's say you were a waiter and that you told them that you made 120,000, they wouldn't even ask for proof of that. They would just approve you based on your credit score. And what they weren't telling a lot of these people, and even the people that were being told, but didn't really know what they were signing up for, is what really caused that was adjustable rate mortgages, meaning you closed on a loan for a certain interest rate, but after 3 or maybe 5 years, your interest rate, adjusted to the market, and most of the time that was a higher rate. Let's talk about some of the requirements that FHA does require, and some of the requirements that some people think that might be required. So for starters, a lot of people think that FHA loans require additional inspections, okay? That is not true unless the appraiser is the one requiring an inspection. So if an appraiser walks in, does an inspection of the property, and doesn't think that the roof is in good condition, he's not a licensed roofer. So he's going to ask on the appraisal report to get an additional report on that. That is the only way that you would have to get any additional inspections. But that's the same thing for your conventional loan as well. Depending on who you're working with, what bank you're working with, some of those banks have what are called overlays, which the best way that I can explain this is it's a rule on top of a rule. So all lenders have the same rules for FHA, but some lenders try to put more strict rules in order to protect themselves, okay? The other thing is making sure that if you're going to do an FHA loan, there are a little bit of different things where the appraisal is going to be a little bit more strict, such as can't have any chip paint, can't have any wood rot, but that's pretty much it. I mean, if you have let's say a hole in the wall, that's going to be called an FHA and conventional. So a lot of the times people see an FHA offer and they think, oh my gosh, this appraisal is not going to go through because there's a hole in the ceiling, and in reality, that's going to get called regardless of what the loan is, not just an FHA loan. Now, if you are looking for more of a fixer-upper, a thing that a lot of people don't know is that FHA actually does have a rehab loan within the program, and it's called a 203K loan. There's two different types of 203K loans. Most lenders won't tell you about them because one, they don't offer them because they're riskier loans, or two, they just don't want to deal with them because they are much harder loans, and it will be required of you to be able to have a little bit more assets, maybe a little bit higher pricing, but those are great loans for people that want to live the fixer-upper dream of watching HGTV and having their fixer-upper home to themselves. All right, let's head into one of the biggest opportunity of how you can cash in on an FHA loan, and that is buying a multi-unit up to 4 units. So you're looking at a duplex or up to a quadplex in order to be able to start your real estate investing by seeing cash flow come in every single month, or even just covering your entire mortgage and living rent-free. So up until the end of 2023, FHA was the only program that was doing this. Now, Fannie Mae and Freddie Mac, which is the investors for the conventional loan, are willing to take more risk and let people have a lower down payment. But even if it's today and you're saying like, I still want to do a conventional loan to buy my duplex, to buy my quadplex, it's going to be more strict and it's going to be more expensive in the rate and the PMI if you go the conventional route. But FHA was the original, the OG of being able to buy more than essentially one property, because even if it's a duplex, it's technically one property, but you have 2 different homes, one for you to live in and the other one for you to rent out. And you're able, 2 of the biggest things is, one, you're able to get into this for as low as 3.5% down payment, which is incredible, because a lot of the times when you're looking to buy your first investment property, you're gonna need anywhere between 15 to 25% down to buy your first investment property. And the second best part is that you're able to utilize the rent of the other unit or other units in order to help you qualify for that loan. So if you, let's say, wanted to qualify for a $250,000 property, but your banker is saying, hey, based on your income, we can only qualify you for 180. Well, if you're looking at getting a quadplex, you have 3 other units that can help you go up on the purchase price because you have more income, even if you don't already have tenants in those properties, because they use comparables of rents in the area there. Now, be careful if you live in one of the high cost areas. So let's say California, Hawaii, Florida, New York, because some of those areas are strict for you to be able to utilize some of those rents to be able to qualify for those. All right, if you have made it this far in the video, thank you so much for joining us today. I am gonna wrap up to tell you a couple more things about the FHA loan, and make sure that if you enjoyed this video that you give us a like, you subscribe, and we'll keep the content coming to make sure that we're adding value to you and helping you understand the home buying process for your next home, or even your current home if you're looking at getting money out of your property. So if we're looking at, I know you've already heard me say that conventional loans can have higher rates if you have lower credit score there. You want to take a look into consideration on 2 different things on FHA. One, your PMI, private mortgage insurance, is going to not only be higher if you are to go the FHA route rather than the conventional route if you have a higher credit score. Now, earlier at the beginning of the video, you heard me say that there are instances where somebody with a high credit score could take advantage of an FHA loan. The reason why somebody would want to do that is if their debt to income is a lot higher and they want to afford a bigger home. So conventional, no matter how good your credit score is, the cap is 50%. So you make $10,000 a month gross, The max with your new mortgage payment and with all your other debts, it's capped out at $5,000. If we were to move over to a FHA loan, that can go up to $5,600 in some instances, depending on all the other risk involved there. So in that case, that's whenever your PMI, your private mortgage insurance, would be higher than in a conventional loan. Now, the last thing on that is that PMI does stay on there for the life of the loan. The only way that you're able to remove that, even if you own more than 20% of the property, is if you refinance the home into a conventional loan. Again, thank you so much for joining us. If you have any other questions regarding FHA or conventional, make sure that you write it down in the comments. Or if you have any other questions regarding buying your first home or your second home or your first investment property, thank you so much for being with us today, and I can't wait for you to watch the next video.